All right. What is up, traders? What's up, tycoons? Super excited for today's video. Lots to cover in today's video. We're going to take a look at energy. We're going to take a look at XLE, USO. We're going to take a look at gush. All right. And go over some of the recent news surrounding the energy sector. All right. We're going to cover, weak demand right now. We're also going to go over the CME OPEC watch tool. All right. If you don't know, OPEC has a meeting coming up soon, and we're going to look at the odds via CME of, are they going to do basically cuts, or are they going to do an increase or no change? I'm really interested, honestly, to see how well the CME OPEC watch tool is going to be predicting the outcome, whether it's accurate or not. We'll dive into more news, as I mentioned, with TC Energy. All right, we also have some U.S. drilling rigs. There's some news surrounding there. We're going to cover that as well. We're also going to take a look at Petrobras, which is PBR, ticker symbol PBR. There's some news surrounding them. As I mentioned, we're going to dive into the XLE chart. We're going to dive into the USO chart. Okay, we're also going to dive into gush. And there's some really good ratio charts. Okay. So this is XLE versus tech. This is basically energy versus tech, or energy divided by tech versus the S&P 500 versus the stock market. We'll take a look at energy divided by the stock market. Okay. We'll zoom in on this. Okay, then we'll go over the overall bullish structure that I've been tracking on XLE, that initially had me as a bull. We came up to the price targets we were looking for. I took some profits on XLE. We have seen a pullback, but there are a little bit of, some concerns that I'm concerned about when it comes to energy. So we're going to dive into everything right now. Make sure to smash that like button, subscribe to the channel. As always, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Be sure to read through the full disclaimer. We'll go ahead and move forward. And so what we've seen lately is weak demand for fuel has pushed down gasoline pump prices for Memorial Day. All right. Happy Memorial Day to everybody watching this video, recording the video over the weekend. TC Energy, all right, has asked the regulators to put the U.S.-Mexico gas pipeline into service. So this is pretty interesting right here to see, the U.S.-Mexico gas pipeline. And then if we take a look, we have U.S. drilling rigs. They have fall for the fourth straight week, marking another 1-year low. The total active drilling rigs in the U.S. fell by another 9 to 711, the lowest count in a year. The total rig count came in slightly below the year earlier level for the second straight week. Last week's count was the first time rigs were lower than the same time a year ago since April of 2021. Drilling rigs targeting crude oil in the U.S. fell by 5 to 570, its lowest number since last May, and gas rigs dropped by 4 to 137, the lowest since March last year, while 4 rigs remained classified as miscellaneous. Total rigs targeting crude oil in the Permian Basin gained 1 to 347, and for the month, the combined oil and gas rig count fell by $44, the biggest drop in 3 years. Now, Petrobras, which is ticker symbol PBR, they seek reversal of the decision to block exploration well near the Amazon. So PBR said Friday it had asked Brazil's IBAMA environmental agency to reverse a decision it made to deny the company's license application to drill an exploration well off the coast of Brazil's Amapá state. Media reports have described the exploration work as near the mouth of the Amazon River, but the company said the well could be located more than 300 miles away. PBR said the drilling is a temporary, low-risk activity that lasts around 5 months and is needed to verify the production potential of the area to begin commercial production in the area. The company would need to request a new licensing process that would include more detailed environmental studies. Earlier this week, IBAMA's director told CNN Brazil the agency probably will not change its position without changes to the project. In 2020 to 2021, BP and Total Energies both gave up on plans to drill in the same region because of environmental and permitting considerations. So most likely they won't get the reversal they're seeking. Okay, if BP and Total Energies were not able to get it, the chances of PBR getting it are slim. But you do have to keep in mind, Brazil, and not to get political, but Brazil is, kind of one of the most, corrupt countries there are out there. And PBR is largely owned by the government in Brazil. So, maybe the government in Brazil will be able to get these things passed along, being that, this is PBR and they have, a large stakehold in PBR. Maybe they can pull some strings, but most likely we won't, they won't get the reversal that they're looking for. All right, we talked about the CME watch tool. If you look, production cuts are only at about a 10% chance. An increase, okay, is at about 5.6, and no change is at a whopping 83%. So via the CME OPEC watch tool, most likely we're not going to see a change. They already announced oil production cuts earlier in the past, and that really caused a big spike in energy. And that's essentially kind of where we topped out, which very shortly after the OPEC oil production cut announcements. As I mentioned, it's going to be really interesting to see whether this is accurate or not, or whether OPEC is actually going to announce more oil production cuts in the future, in the very near future. Okay, June 4th is the date that you want to mark on your calendar. Now, here we have the XLE daily chart. If we take a look, all right, and I've been covering this for a while. All right, we have been in a bearish structure. All right, we have this selling channel that we've been in for a while, since October of last year. Remember, October is when the stock market bottomed and tech bottomed, and we've seen a large rally in the stock market and tech as a sector, all right, versus energy has really been in a bearish channel since then. And this makes a lot of sense, okay? Generally, energy going up is bearish for tech, and energy going down is bullish for tech, okay? That's a very simple concept to understand. We did see a slight bounce here recently, but we're still trading in the lower half of this bearish channel, right? We had some bullish divergence indicated by this low and this low here, but we had a low and then a higher low here on the RSI. Remember, this is your relative strength index. So when price action is going lower and you have lower lows, but you have higher lows on the RSI, this is a term known as bullish divergence. And we did get a nice bounce in XLE, okay? The big question right now is, what is the MACD going to do? We're not really seeing any clear signals. All right, the red line is pretty much just trading right along the yellow line here. And typically you want to look for entry and exit signals based on the red line. Now, when we see it cross down below, that's been a good exit signal. We got that cross down below over here, and we saw a sharp move to the downside. We got a cross down below over here as well. We saw a sharp move to the downside. We saw a crossover down below over here, and we saw a sharp move to the downside. This right here is actually a island top reversal pattern where you have the gap up, and then you have this sideways movement, and then you have a gap down, island top reversal. Right. And if you wanted to, you could potentially say that we have an inverse head and shoulders forming right now. Okay, I'll go ahead and draw that for you guys. So you have a left shoulder right here, you have a head, and you've got a right shoulder right here forming, and we could potentially see a move like this if we break this neckline right here. That's definitely something to keep an eye on if you're looking for any short-term trade possibilities, but no confirmation yet. It's just something that's forming. Ultimately, we will need to break that neckline and not really consolidate sideways. If we do that, it's going to void the pattern, or if we get a move down, that also will void the pattern out. Okay. So big question is, what is the MACD going to do? Is it going to give us a curl up to the upside and potentially signal a buy signal, or could we see this thing curl back down to the downside and ultimately give us another sell signal? If we look at USO did a really good job rallying here recently, but the big thing was it wasn't able to get above its major resistance, which is the 61.8% retracement level right here at 65.68. You can see we did get above it, but we weren't able to maintain above it, right? Rather, we got a look above and fail. All right, we really, really need to stay above that area. Now, that's mostly what I'm seeing right here on USO. Okay, we needed to really flip that area to support from resistance. You see, we had the strong push up. Okay, we hit above our breakout zone, but we weren't able to get past the supply zone and hit the bullish price targets on USO. Right over here was that OPEC oil cut announcement. Essentially, we had to move up. Okay, we got above the breakout level, and we really wanted to see us break out and hold support here and turn the old supply zone into a new demand zone and push higher, and we weren't able to get that. Okay, we pretty much gave back most of the gains. We had that line in the sand right here at 60.28. We ultimately kind of put in a abandoned baby pattern right over here, and we saw another push up, but we weren't able to really flip that 65.68 level to support, which is what we needed to do. Now, what's going to be interesting to me, okay, is the bullish divergence we still have, all right, when it comes to USO. All right, if you take a look, we had the low here, we had the low here, and on the MACD, we had this low, we had this higher low. Obviously, that's when we had a really strong rally to the upside. Lots of people I know went long in this area. We fell perfectly into our demand zone, consolidated here, and then saw a nice reversal. But, you know, for right now, we're going to see, you know, if we do end up coming back down to this trend line here, are we going to bounce off of there and potentially get another entry signal? Or, you know, could we end up actually breaking through this line and heading lower? Now, you know, each time that we've hit oversold conditions, we have gotten a nice bounce here recently. All right, we are oversold over here, we're oversold over here. Okay, and both times we've seen a nice move to the upside after being at those oversold conditions. So if USO does end up getting oversold, I will be potentially, you know, looking to play it long, just depending on where things are at, right? Now, if you look at things now, all right, we almost have a bear flag forming, right? So if we were to draw, you know, our trend line here, okay, so this would be our flag pole. And, you know, let's just say that this right here would be the flag itself. You know, we could draw something like this, okay, and say we have a little bit of a bear flag forming here. So you do need to be cautious. Essentially, if we break through this lower trend line here, we could see a move down, okay, all the way back to about 58 or 54. That's something you want to be cautious of and be prepared for. Ultimately, 65, 68 is that really big resistance level we need to get above and really maintain above. If we can flip this level to support, then we have the chance of hitting our previous breakout level of 70.53. And above there, we do have some bullish price targets, but lots of work to be done until we get to 70. So we're going to see what happens in the meantime until then. Now this is Gush. Okay, this is the leveraged energy ETF. All right, and we did have a descending triangle pattern here. All right, remember, a descending triangle is going to be a continuation pattern, and we can see that the continuation of the trend, we were in a downtrend. All right, and then we ended up forming this pattern here. And ultimately we did break below. All right, now we have put in a double bottom here, right, in our demand zone, and we're starting to see a little bit of a bounce. It's going to be interesting. Can we turn this into a W pattern off of the double bottom, or will this be just simply a dead cat bounce? Now, the major resistance levels here on Gush are going to be 125, 133, and 141. All right, those are roughly the major resistance levels. If we can get above these levels and flip those to support from resistance, that's when we have a chance of getting a reversal and potentially heading up into our overhead supply zone, targeting the 180 to about 210 region on Gush. Okay, but for now, 100 is pretty much the line in the sand for the demand zone. If we break that demand zone, we do have 3 gaps down to fill, one at 80, one at 60, and one at a roughly $55 on Gush. Remember, gaps tend to fill about 90% of the time. The big question is when they're going to fill, not if they're going to fill. And if you take a look, we do have a big gap up on here, you know, up to about 220, above that 220 region on the Gush chart. But you have to look, you know, where are we closer to, right? If we were to draw, you know, we're much closer to the 3 gaps down than we are to the 1 gap up we have to fill. So, you know, if price action is going to be drawn towards these gaps, we need to keep an eye on it breaking through that 100 level, because that's when, you know, price action is really going to start gravitating towards those when it comes to Gush. Now, this is XLE divided by QQQ versus the SPX. So, you know, SPX is generally considered as the stock market, the S&P 500. And you can see that these two clearly trade in divergence, right? Meaning that they go different ways, right? When the S&P 500 is going up, we see that XLE divided by QQQ is going down, right? And then we see when this goes up, we see the stock market going down. And so recently, we can see that this divergence is still playing and still a good correlation, all right? But what's really interesting is that the energy divided by tech, essentially ratio chart right here is very, very close to its, you know, September, maybe you want to call this September lows right here. And if we break through here, it's going to be, you know, there's weak structure, right? There's a little bit of support right in this area here, but ultimately it's very weak structure through this area right here, and we could see a big move to the downside sometime soon. That kind of correlates with Gush breaking through that demand zone and heading down to fill some of those gaps to the downside. Versus you look at SPX, Okay, at the same time period, right, it's not even close to its highs yet. So the stock market still has more room to run potentially versus XLE divided by QQQ. That ratio chart looks like it's, putting in this rounded top right here. Okay, a rounded top, looks like a topping signal to me, honestly, most of the time. So you want to be very cautious of that, right? We're putting in a little bit of a topping signal here. And if we really break through this line, that could be it for energy, and we could start seeing bearishness for energy. As I mentioned, the stock market still has room to go, and we could potentially see a breakout if this continues going lower, right? Now, this definitely could be an area of interest to be going long at, right? I mean, we're very close to this support level here. Okay. And you could be looking to play the bounce for a short-term bounce. Okay. Or, we may get a longer-term bounce and find support at this area. We can't really predict the future, but what we can do is try to plan for things and look at how the charts look, right? If we take a look here, we have the XLE divided by SPY ratio chart. Now I like this one, okay, but the big thing to me, all right, is that rather than getting an ABC correction right here, a 1, 2, 3, we got a 1, 2, 3, 4, 5. Now, the reason that I don't like that, okay, is because typically markets tend to move in 3-wave and 5-wave structures. Now, your 5-wave structures are going to be your impulsive moves, right? And so those are going to essentially be the trend, right? So, we had this 5-wave move to the upside into our supply zone here, and we wanted to see an ABC correction and then get another 1, 2, 3, 4, 5 up and potentially hit new highs for our wave 1, right? Your wave 1, your wave 3, and your wave 5, those are supposed to be 5-wave impulsive moves, right? If you see here, 1, 2, 3, 4, 5. Okay, wave 3 is typically the largest wave out of all of these. And so, we got that 1, 2, 3 there. Okay, and then here, as we can clearly see, we got a 1, 2, 3, 4, 5 down. So if this is going to be a new impulsive move and we're going to start a new trend, we would be looking for an ABC correction and then a 1, 2, 3, 4, 5 down. Now, if we go to my next chart, okay, this is what I was tracking. What I've been tracking for a while, okay, is the bullish structure where we were looking to, essentially come up to this area, this former demand zone that turned to new supply. All right. And you can see we hit the targets, right? We got an ABC correction here, right? Wave 1 was a nice 5-wave move to the upside. 1, 2, 3, 4, 5. We hit our zone, and I was looking to get an ABC correction. But if we go back to that last chart and zoom in on it, you can see rather than getting a 1, 2, 3, we got a 1, 2, 3, 4, 5. So we need to be very cautious, right? It does look like energy is due for a bounce sometime soon, but we need to be cautious if it's only an ABC, right? If it doesn't turn into a 5-wave impulsive move, then most likely this is just a correction, and we could see another 5-wave structure to the downside after the ABC bounce, right? So I'm not really long, looking to go long energy right now, just because things aren't clear to me, right? And I'm not here to tell you guys what to buy and sell, but rather just to go over some data. Remember, all of these candlesticks are really just data, and the best we can do is try to interpret the data the best we can. And so that's what I'm trying to do, and give you guys some data that maybe other people aren't looking at, right? Maybe they're only looking at XLE, or maybe they're only looking at USO. I'm trying to give you guys some good ratio charts so you can kind of understand some of the price movements. Now, with these yellow lines, you may be questioning what these are. These are the major Fibonacci retracement levels. All right. And we use these because nothing moves in a straight line up and nothing moves in a straight line down. You get the move down, retracement, continuation lower, move up, retracement, continuation lower, or continuation higher. So that's how you spot trend continuation, right? So we've had this move up. We're looking for a correction wave, and then we're looking for a trend continuation if you're bullish. Ultimately, if we break through this level here, okay, that's going to be bearish, and we're going to get a reversal. We're going to retest some of the previous lows on this chart, right? So, really, that's what I'm looking to see. Do we bounce here and then break through the lows, or do we just straight up break through the lows, retest, and then head lower? Or are we going to be able to hold here and continue heading higher? Right? It's not a bad area to go long and set a very tight stop loss on when it comes to energy or USO. You can set yourself a tight stop loss and just cut the play quickly for a quick loss if things do not go the way you intended. Otherwise, you know, there is potential, you know, for things to start recovering, but we need to be very mindful that it's not a short-term bounce and just a corrective bounce versus you know, an actual another leg up to reach up to new highs, right? Remember, if we take a look at the you know, the chart zoomed out, right, we did come down to exactly the wave C area, right? And I put this on the chart in my last, you know, in one of my last energy videos before we even came down to here, right? Once we were approaching these levels, I said, hey, we're looking for wave 5 up here. You know, and then most likely we're going to get an ABC correction pullback, and then we want to see another move to the upside. But rather than getting that ABC, as I mentioned several times, we got a 5-wave structure, and we need to be pretty cautious of that, okay? Because ultimately that could lead to things coming back down, right? You know, I mentioned that right here you can see a little bit clearer, right? Wave 3, wave 5, these waves, they should be 5-wave structures, and then your wave 4 and your wave 2, you want those to be ABCs, right? So you can see we got an ABC here, we got an ABC here. Things were following up nicely right here. We got a 1, we got 1, 2, 3, 4, 5. Okay. Over here, 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. Now, possibly you're gonna get that ABC, and then get another 1, 2, 3, 4, 5. Okay, which isn't what I want to happen. All right, I've been you know, looking at energy, paying attention to a lot of energy, been bullish on it. But for right now, honestly, I'm just not really interested in going super long in energy. You know, this could be the perfect time to get in, and it could, you know, complete this 5-wave structure to the upside up over here. But right now, I'm just not positive, right? And so cash is a position. A lot of people don't think about that, but you know, you don't always have to spend your money. You don't always have to be in a trade, right? There are other things to trade. I drop videos on several other things. Okay, not only do I cover energy, oil, I cover natural gas. I cover stocks, individual stocks. I cover bonds, TLT. I go over crypto. Okay, there's always, you know, a good trade out there. You just have to look for it, and rather than trying to force a trade, you know, you remember cash is a position. Okay, it's a slept on position. You know, rather than just always putting your money in a trade or feeling like you always have to be in a trade and taking losses when you're not right. You know, you can wait for clarity, and you can wait for confirmation. Okay, that's one of the best things that I've learned over the many years that I've been trading. And hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. If you want to help support the channel, feel free to use that link in the pinned comment down below. For Simply Wall Street, you guys can get a 14-day free trial and up to 40% off for the first 100 people that join. We haven't got 100 people to join yet, so if you're watching this, you still can get that discount. It's a really great platform. It really dives into fundamental analysis. I mostly cover technical analysis on this channel, but fundamental analysis is really, you know, valuable and important as well. They break it down for you guys very simply, and also give you nice, beautiful graphs to help visualize it. In case you guys aren't pros at fundamental analysis, Simply Wall Street is definitely going to be something that you guys are interested. Okay, so that'll be it for today's video, and I'm out.